Hi, I'm here to take you through the Coforge results. In fact, the stock has jumped nearly around 14% in today's trade on the back of a very strong FY22 revenue and EBITDA margin guidance and also a strong Q4. In fact, for FY22, the management has guidance for an organic revenue growth of close to around 17% in constant currency terms. In FY21, they had clocked in a revenue growth of 11.5% in constant currency terms. EBITDA margin for FY22 is seen expanding close to 100 bips to 19% versus 18% in FY21. This is excluding ESOPs and acquisition costs. In fact, the management states that they are exiting FY21 with a sequential dollar term growth of 7.1% in Q4, which forms a very strong ramp up for growth and margin expansion for FY22. If you look at the Q4 results, well, yes, the dollar revenue grew 7.1%. The revenue growth in constant currency terms was at 5.1%, and also the Q4 EBITDA margin was largely flat at 16.8%, and the profits were up 9% on a sequential basis to 133 crore. Management stated that the healthy margin performance for the overall year-end Q4 was on account of the growth-driven operating leverage that was largely able to offset the impact of one-time bonus payout. In fact, the utilization rate has also improved in Q4 to 81%, and the attrition rate is fairly stable at 10.5%, and they have gone ahead and net added 967 employees during Q4 with a total employee strength of 12,391. If you look at the order intake, that's fairly strong at $200 million for Q4. Executable order book for the entire 12 months itself stands at $520 billion. This was at $468 million on a YOY basis. Cumulative order book for FY21 in fact stands at $781 billion, and the management states that they have been able to sustain a good momentum in terms of the order book during the quarter with two significant deal wins. Not just that, the company has recommended an interim dividend of rupees 13 per share, and the record date for this payout is 19th of May 2021. So yes, watch out for that record date. And also management states that they have recently announced the acquisition of a controlling interest in SLK Global Solutions, and expenses related to this transaction are partly reflected in Q4 FY21. In fact, if you look at the overall mix also, that's fairly diverse. They have revenue mix across BFS, insurance, travel segment, with insurance forming nearly around 30% of their overall revenues itself, and also